Pete Najarian joins me from Market Rebellion. Pete, good to see you, sir. We're getting finally whacked a little bit here. Let's kind of start with the basics. VIX moving to 20 certainly looks big on the candle, but we've also had really muted VIX for weeks.
Yeah, the fix has been, as you know, I mean, you've been watching this just like I am every single day. I like to see where it is. I look at two things. I look at the 10-year and I look at the VIX. Those are the first two pathways that I want to see in the early morning. And the fact that the VIX finally did get up here over 20, it did pull all the way back as well, though, to be honest with you, Oliver. That was pretty interesting. The fact that we actually went negative on the VIX for a little bit there. But the direction's definitely clearly going to be higher. And when we see what's happening with the markets, it makes a lot of sense. The S&P getting beat up pretty good. The Dow down significantly, down 700. Obviously, the NASDAQ getting slammed pretty hard as well. So the three major indices. And here we are pushing towards 21. Is that the worst thing in the world? Absolutely not. But is it something that I think that we have to keep a note of, that it's not, it gave back early, but the fact that it's kind of holding on and actually going up here towards the end of the day, that's something that I think is a little bit different than what we've been seeing for most of this year. Just the fact that we're going to probably, from the looks of things, maybe get up towards 21 or maybe even a little higher than that. And we have had some option activity in the VXX. You and I talked about that last week. We haven't seen as much recently on the VIX itself, but that VXX, we talked about it last Tuesday, I think, and we had just seen some very interesting option paper in there, short-term volatility trade, and they already got a nice hit already once, and it looks like we're going to get another batch of that, making that a little bit better even again.
The creep in VIX has been there, right? We've had it since December. We've talked about it on this show where stocks were climbing, staying firm. S&P 500 was just marginally, inching to higher highs. But volatility has been creeping. So even though nominally it's been low, we've had a little bit of some kind of buildup to this, Pete. And I think that's interesting because it might suggest that we just sort of needed to puke a little bit because there was a lot of single stock volatility in places. We talked about dispersion and some other metrics. So maybe this is just kind of a culmination rather than the beginning. What do you think about that?
Yeah, I think that makes some sense. I mean, given what we are seeing in the markets and some of obviously what we're hearing from the president and all of what's going on now, I mean, is this Liberation Day all over again? No. But is it something that we need to see if the markets are going to get calmed down just a little bit from where we have reached up to today? A lot of that's going to be very, very dependent on how things are handled, I think, going into the future here. And, a lot of people are pretty nervous about some of the strategies that are being used for this whole thing with Greenland and so forth. Is it going to have any legs? And if it does have some legs and there's some pushback going on over, obviously, in Europe, that's going to give this volatility a nice, solid lift. There is no doubt about that for me.
Yeah. To the point of the sort of political angle here, I generally am of the view that geopolitics leading to sell-offs are the most reliable dips to buy. However, I will say there are some things that I particularly don't like in today's session, Pete, which is dollar down, yields up. Yields up, dollar up is a great trade and message because it tells us the economy is strengthening, U.S. is getting more edge. Yields up, dollar down is more like maybe we don't trust these bonds or this government.
Yeah, I think you're exactly right. And meanwhile, we're looking over at Japan and we're seeing them get a little bit stronger and moving in the opposite direction. So, the bond market is an interesting one. You've got these various yields. You've got the bonds going a little bit lower and less demand and all of this. And, there's other factors as well that are out there. I mean, you and I have often talked about different things in the world of crypto. I find that very interesting as well because they're getting hit pretty hard today. Why are they getting hit?
Smoked?
It's because of the risk that's involved there. The risky assets are going to have less attractiveness in a situation like what we're dealing with, I think, right now. And could that get cleared up pretty quickly? It could. We saw exactly how things played out a year ago, April. That it took a little, a few days, but not much more than that before we started to see that big turnaround after seeing markets that were getting slammed. And I'm not trying to compare it necessarily to that. I don't think the markets are quite in the same spot, but They possibly could get there if the president decides that he's really going to go all in on this Greenland and and some of the tariffs that he's already talked about with some of the Europeans.
It's a real probability. I'm pulling up the numbers right now from Kalshi. Will Trump buy at least part of Greenland? By the way, this is also on some of their most actively traded contracts today. It's right there. Will Trump buy at least part of Greenland? By the way, it's at 42%. So, I mean, I don't know. That's not low, Pete. That's not low.
No. And that, I think, for me at least, is a little bit concerning, right? Because I think that is something where if we get to that point and we get that far, I think there's going to be a lot of pushback from coming around from the rest of the globe. So is that going to be something that's going to, affect the markets? I sure think it could. And it puts us back into that position like we were nearly a year ago. So it's interesting. I'm a little bit surprised that it's that high, quite honestly. But it's all in the presentation and what does it really look like, and the aggressiveness that the president, at least so far, has shown that this is the possibility of this. I don't know. What I don't understand also, Oliver, quite frankly, is I just don't really get the advantage. I can see where the president is on many different other issues, but on this particular one, I don't know that we have to go into this whole purchasing of Greenland idea. I think that, are they friends? They seem to be, pretty friendly towards us, right? I mean, they're not pushing all over the place on us. So I don't know.
Kind of a non-issue, to some extent, I would think. But I guess it's just, putting our European allies in a tough spot, I think, basically, which is like, now we got Europeans like sending troops there. What are we going to get in like it's just, I don't know. My gut wants me to, make it a small thing and laugh about it. But who knows? Yeah. Who knows what's possible? Yeah. But obviously with Davos too, the timing, I think it's just a little drama, and maybe we needed a reason to puke. But I mean, you can see the odds going up. And by the way, the Kalshi is before 2029. This one's at 46%. So for just taking part of any control, I mean, it went up substantially the last month or so. To your point, so maybe it's not a joke.
Yeah. Let's hope that we can get things kind of ironed out and get back to the markets the way they've been playing out. And obviously, we started earnings season basically in the last week or so, and we're continuing to get further and further along with the earnings. And we've got less in the financials, although there is quite a few of those regionals and so forth that are standing out to me as far as as I'm going through all the various names. But you've got 3M, you've got Netflix, you've got Interactive Brokers, you've got a lot of different names. Yes, the regionals are there too, but you've got J&J, you got Schwab, you've got Halliburton and GE. So it's another very, very big week of earnings of some big major companies as well, which I think, oftentimes that can be something very, very positive if indeed some of these folks are doing as well as maybe many people think they are.
3M got smoked after being in the midst of somewhat of a recovery trade there for the better part of the last year. It was a dog for a while, but then had a nice run in 2024, earlier this year too. You've been trading this, Pete? Because the trend has looked pretty good.
Yeah, I have not, quite honestly. I mean, okay. I think I like 3M. It's right around the corner from me, Oliver. I literally could be there in 10 minutes from my house, but no, that's not one of the names. I find myself in a lot of various names throughout, different sectors and so forth. 3M, just because it's in my backyard and I do know certain things about things that they've been dealing with for a time frame or two. I just have stayed away from that particular name. Doesn't mean it's awful or anything like that, anything of the sort, but I think that there are better opportunities out there in some of the other stocks that I seem to be more often in. And I'll tell you what, and I know you and I will get to it, but gold and silver, it's just amazing what's going on. And I'm not saying we have to go there right now, but
no, I'm working my way there because we got Freeport, which is part of the metals trade. I was going to go into it through the earnings route because Freeport's got earnings this week too, and that's copper obviously, but other stuff too, right? They mine gold as well, and that chart, I mean, a couple days of consolidation, maybe there's a play there, or would you rather just go straight for the literal gold, the stuff that's been doing so well?
I don't mind doing all of the above. I like gold because all we see is GLD hitting almost every single day. I mean, you and I have talked about this one, but literally 5 hits we got hit last week on Friday. You know how many we got again today? About another 5 hits on these GLD. It's amazing. And today we've had 3 GLD hits again, unusual option activity. One of them,
Wow.
112,000 options trading on the 440 line of expiration on the 30th. So
Okay.
these are not just small trades, these are massive trades. We had another 56,000 of the Januaries that expire this week, actually, on Friday, the 435. So there's still an appetite out there right now, Oliver. It's absolutely amazing. And by the way, we started to see a little bit more coming from silver today as well. SLV is the venue that they want to use. And it's been really, really interesting to see that suddenly, silver popped up once again. Now, silver's been hitting time and time again, and some of those different miners, absolutely, they've been phenomenal. But we also have Alcoa at the end of the week as well. I think it's the same day as Freeport. So yeah, we've got some of those kind of names. I love Freeport. I think that they are in a great spot, and because of that, I think that where they are, and we don't probably give copper its just due in terms of what that's happened, and I think it's only because it's overshadowed by gold being a freak show to the upside.
That's right.
and silver as well.
I like the way you put that. Gold is a bit of a freak show, man. There's not a lot else like it out there right now. Just the consistency of it, the reliability of it, the massive candle today on it. The fact that, so they were buying the strikes at 440, which is, we were really kind of flirting with that early at 439. So that's not too far off.
No.
I mean, especially after we had 4 days of going sideways. Around 420 and a little chop between 400 and 420. It kind of looks like one could argue this is a breakout move.
Well, when you see gold jumping up almost 4% in a single day, that's a little bit out of the ordinary, I would say. And so it makes a lot of sense. And GLD is a great venue, for people to choose from that they want to try to trade gold in the way that they can. And it's obviously the options world. They're on fire with this. By the way, last Friday, 80 plus million contracts trading where you're sitting, one of the places is where you're sitting, but in the options world, 81 million contracts trading. That's not the highest ever, but when you look at January and you look at the fact that we're averaging somewhere close to 68 to 70 million option trades per day, it's just amazing. And you are in the right place, my man. You are sitting right there at the CBOE, and you're seeing
they're popping
options
today.
trading like crazy. It's
Yeah,
great.
no, there's definitely some action here. Finally getting some volatility to move. The question, I guess, if we're thinking about kind of the larger portfolio strategy, Pete, is, do you think that this is telling people that they should own metals as part of their main kind of strategic positioning? I know that obviously we're talking options. We do a lot of trading on that. There's exploitative moves that have been in this market to capture some of these big swings. But I wonder if people might also want to start thinking about this as just a section of their portfolio to hedge out, maybe where they used to have bonds, which is what everybody's been vying for, right? The gold bugs have been vying for it, the crypto, the options traders, the private debt markets, everybody's vying for that bond side of the portfolio they say is broken. And today's one of those days where you're like, all right, if I owned volatility, I would have been happy. If I would have owned gold, I would have been happy. Not so much sure about some of the private stuff, but what do you think?
And if you own silver, you'd be damn happy.
That too, yeah.
I mean, these moves that we are seeing and the options that are there, and Oliver, I'll be very candid with you as far as like those options. Most of those are in the form of spreads. And why do I bring that up? Because it's important, because they're not expecting just an absolutely incredible move, at least not at the moment. They're looking for moves that are going to start chopping and start this move that keeps on moving higher. That's exactly what we are seeing in gold. So it's not that they're nakedly going out and buying 100,000 options. They're going out, they're buying the 440s, and they might be selling the 450s or the 455s. I mean, each trade's going to be a little bit different, but depending on risk and what people are looking for. But there is an incredible appetite, is the way I would phrase it right now, for both silver and gold. You can even throw in copper to that same group or whatever, because that has just been on the rise, and we all know that. But it's just really been a silver and gold sort of a magic time for them. And it's been going on for a while. This isn't something that just started a week ago, a month ago, or 2 months ago. This has been going on for quite a while where the buyers have just absolutely gone in and continue to come into GLD on a daily, weekly basis. It's amazing to me.
The Burl Ives trade, as you put it, lives on. Pete, are there any dips you like today? Is there any stuff in the tech world that looks good to you? We've been talking a lot about, the silver and the gold trade, but also, I mean, something to be said about any of the tech stuff that's been either sideways or breaking down. Anything there that looks juicy to you?
Yeah, I do look at some of the various names, and I look at something like NVIDIA. Why are they down 3+% today? Well, they're down because of what has happened essentially overnight, that the Chinese have said, you know what, maybe we don't need those chips, the million chips that they were going to send over, the H200s. I think that gets resolved. I hope that for their sake that can get resolved, and I think that it will be. I think this is something of they're playing some sort of a game. But so that one becomes interesting for sure. And I'll tell you, people that are loving the AI world and want to be exposed to that, there's a number of different names out there that just continue to be very, very strong, and it's incredible. I mean, but take a look at Intel, take a look at Micron, take a look at Marvell, take a look at Seagate, and some of these names, Western Digital. These are names. These names are names of the past, but you know what? They are not in the past. They are in, and they are right there where we are. So, if you want to get away from NVIDIA because you're a little bit scared about what's going on with the Chinese and so forth, I get it. But when it comes to these names, they are absolutely on fire, and they continue to be on fire, and we continue to see option activity in those as well.
It's a really good point that the recent tech winners still look quite strong. Western Digital, Micron, we talked Intel as well. And pretty impressive that those have held up today, and the market is not going for recent winners to take profits. They're more interested in some of the mags, which have been flat.
Right.
Rather than, ripping like some of these others have been. Pete, before I let you go, we got Chris Bretcher on deck, but let's talk some football real quick. A little bit sad, but, that's the name of the game. My Bears bet on that 8% or whatever didn't pay off, and now we are left with Kalshi saying that the two most likely scenarios are New England and Seattle, and New England and Rams, which is kind of interesting, because then if you go to the team most likely to win, Kalshi's got it as Seattle, even though, obviously New England's in here twice. So I guess people just think New England looks great for their division.
Well, when you look at what happened between Seattle and LA, and by the way, you've got to be impressed with just the sheer fact that these are two teams from the West, along with the 49ers who were in there until they were beat. And they got beat primarily because they were so hurt. Their defense literally had 7 guys on IR, injured reserve. So that made it very, very difficult for them to be able to do much of anything. They didn't do much of anything, and Seattle beat the tar out of them. But that Seattle team is really good. I mean, their defense is outstanding. The offense does an amazing job. They run the football really, really well. So, I look at Seattle and I think, well, the Rams, I think, are an outstanding team, great quarterback with potentially an MVP type of a year. But I still kind of lean towards Seattle. They split during the regular season. I think Seattle takes them out. But the one thing that is a little bit scary is what's going on with, Denver, and the fact that they've got a different quarterback because of the fact that their quarterback, Bo Nix, broke his ankle the second to last play of the game, which is unfortunate.
Wow.
So there's a lot of things going on out there. But if I had prediction right now for the Super Bowl, in my mind, it would definitely be Seattle. And then I think you've got to go with New England. I mean, New England is really pretty special. And I'll tell you, Drake May, he looks like, with his helmet on and everything, he has a Tom Brady look to him. He's about 6'5". He's about 235 or 40 pounds. He's a big guy.
Big dude. Yeah.
He's got a cannon for an arm. I remember him at North Carolina. He's a heck of a player, and this is only, his second year, I think, in the NFL, and he looks like a veteran who's ready to go to quite a few Super Bowls, I think, in the future.
Obviously the Bears story would have been nice, but I got to say, just the, permanence of New England as an NFL fixture is also a pretty amazing story. I mean, to just rebound, be right back in the running for the Super Bowl again here. So it looks like a deep underdog for Denver right now is kind of the main point. And the Rams as the highest odds right now on Kalshi. Great stuff, Pete Nigerian. Good to catch up. You the man. Thanks, sir.
You are the man. Appreciate you, Oliver. Have a great day, man.
Fun chat. Pete Nigerian,
Thanks.
co-founder at Market Rebellion. Again, take a short break. We got